Welcome back to the investors. In previous chapter, we have gone through investor psychology impacted by trends. But currently, we will go through how is trend determined. Of course, the trend is never a straight line. But it would be too easy to tell that it had a reverse. Instead, the trend is a direction rather than a line. Many doubting participants often accompany this direction. Sometimes it can be arbitrageurs who bet against the trend or who are merely trading the spread. More likely, it is investors or traders running out of money or stock, or just holding back for a little while, hoping that the price will retrace back towards their orders. In other words, the security price oscillates back and forth in small trends along its travel in the larger trend. This makes determining when that larger trend is reversing a difficult decision, because any signs of reversal may only be for smaller trends within the larger trend. Additionally, securities occasionally rest during a trend and move sideways as the earlier rise or fall is digested by all the different players. The psychology of what causes these spurts, stops, and retracements is an interesting study by itself, but again, it is irrelevant for our present discussion. We simply want to know what our trend of interest is and whether there are signs of it ending or changing direction. So we'll go through peaks and troughs again. What is the simplest way to look at prices and determine the trend? The easiest is to look for peaks and troughs within a series of price oscillations. If the peak tends to be higher than the earlier peaks, the trough trend be higher than previous troughs, the trend must be upward, as you can see in the figure 4.2 given in your presentation. It is just simple. It is that simple. If peaks and troughs are lower than previously, and the trend must be downward. If the peaks and troughs are scattered, the trend is undetermined. And if the peaks and troughs occur at the same relative levels, the trend must be a trading range. It is much easier to look at price trends on a chart. Most technicians use either bar or candlestick charts to draw lines representing trend lines. There are many ways to do this that are discussions later in this chapter. For now, let us begin with the discussion sideways trend, because they display very clear and important technical concept called support and resistance. In next session, we will discuss about determining a trading range, and this will be our final thoughts on the trends. Thank you.